Now being the time for a meeting of the Finance Investment Committee of the Vallecitos Water District, Monday, July 27th at 4 p.m. via teleconference. Notice to the public, due to the evolving situation with the COVID-19 coronavirus and Executive Order N3520, so long as state or local public health officials have imposed or recommended social distancing measures, Vallecitos Water District will hold future meetings via teleconferencing and allow members of the public to observe and address the meeting telephonically or otherwise electronically. During this period of time, Vallecitos Water District will not be making any physical location available for members of the public to observe the meeting and offer public input. The public is encouraged to watch and participate in the meeting from the safety of their homes. The meeting can be viewed on the agenda page located on the main page of the district's website. Public comments or questions can be submitted to the following email address: publiccomment@vwd.org. All written comments that are received 90 minutes before the meeting will be provided to the board, and a record of the receipt of the comment will be noted during the meeting. Okay, call to order. My first question is, do we have any written comments?
I've not been made aware of any written comments to the email address.
Great, thank you. Okay, items for discussion. Number one, annual year in review presentations.
Yeah, so Wes and Mike are gonna actually walk you through the presentation, but the reason we're doing this is you probably know that every month in the second meeting, the second Wednesday of the, or I'm sorry, third Wednesday of the month, in the board packet, there's a summary of our kind of financial situation. It's a monthly update. When we just got done with fiscal year 2020, so June 30th ended the last fiscal year. So I thought it would be worthwhile to provide the Finance Committee with an update on kind of how we did last year. And I say kind of because the results aren't quite finalized yet. So in having a discussion with Wes and Mike, we kind of had this discussion about timeliness of information and accuracy of information. Typically what we do, every year we have our expenses audited. So we will conduct an FY 2020 audit, but the process of the audit takes time, and it's usually not until November timeframe that the books are audited and we could provide final financial information. And that's pretty far down the road. You know, that's 5 months past the end of the fiscal year. So we're toying with this idea of providing information about the previous year ending in a more timely fashion, but with the caveat that some of the numbers will change. So keep that in mind as you go through this, is that these numbers are not final, they're not audited, but they're a pretty good reflection. And as Wes and Mike present the information, they'll tell you what numbers may or may not change. So you'll see some numbers now. We're proposing to present this information to the board at the August 19th board meeting. And then there'll be a point in the future when the audit is in, and we'll give final numbers. So again, this is just, I wouldn't say it's preliminary. It's the best information we have to date right now. Feel free to ask any questions you have. With that, I'll turn it over to Wes, and Wes and Mike will walk you through the financial update. Wes?
Good afternoon. Yeah, we're going to do a little year in review here today. Hopefully it's, as General Manager Pro mentioned, it's presenting timely information so that the board can see how we did during the year. And all the information we're presenting tonight is included in your board packets. It's included quarterly, and this is the fourth quarter of 2020. So 2020 year in review. The agenda for tonight, before I get started on that, it is important to stress that these are preliminary numbers. They're unaudited, and actually they don't include a lot of accruals and other entries that will be made in preparation for the audit. We're still getting invoices that are coming in for materials, for services, for projects, and we'll be getting those probably until mid to late August. So we have a significant amount of expenses that actually were done in June, we just haven't been invoiced on yet, that haven't been recorded. So The information you're seeing tonight is what we had as of July 5th it was actually in your July 15th board packet. So we will be talking about how the numbers are preliminary and they will change, but we did want to give you a snapshot as of June 30th for now. So the agenda for tonight, we'll go over the water operating results, which is water operations versus budget. So actual versus budget as of June 30th. Sewer operating results, same thing, sewer operations, actual versus budget. Then we're going to talk about the June 30th, 2020 reserve summary, the reserve balances. And there I want to just let you know that the reserves are different than operations. Reserves are on a cash basis. So when money comes in or money goes out, it's recorded in reserves. So because it's cash basis, the numbers you'll see for reserves are actual numbers and they will not change. So I'll show you the reserve summary and then we'll talk about the replacement reserve balances as of June 30th. And then we'll talk about the capacity reserves. Finally, then I'll show you how the reserve balances compare to our budgeted reserve balances. And then after that, we'll go into the next steps. So the water operating revenues, I'm going to have Mike discuss this because he knows a little bit more about the details on the water sales and other charges. So Mike will give you some information on the variances here.
Sure. So real quick, before we go to the slide, Wes and General Manager Bruin were talking about there's things in your board packet every month. We don't have a slide for this, but you always see the pie charts every month and in the graphs every month. So for water sales, I just wanted to mention that from last year to this year, our customer base, the amount of meters increased by 77 meters. So we had last year about 21,000, I think it was 21,848, and it's now 21,9 something. So it increased by about 1/3%, 0.33% as our customer base increased. We projected about a 1.2% increase. Really no big difference between what we projected and what happened. We projected like 150 new meters and only 77 came in. But besides that, so water sales. So we budgeted $31.8 million. What came in so far was 27.6. Now, as Finance Manager Owen mentioned, there are still some what's called accruals that have yet to come in. So what that means is that we could have had water that was sold on June 15th that hasn't been invoiced until July 15th that won't be accrued until another week, 2 weeks, 3 weeks until the books are actually closed. So between now and the books are closed, we're expecting about $3 million more in revenue to come in for water sales. So you see that the variance is about 13%. We're only at 80%, 87% of budget. If you include the accruals that are still to come in, we will be at about 96%, 95.5%. So we're about 4.5% below budget, which if you remember from last week, we gave the presentations. That's not surprising. We've had some couple of wet months in January, February, or February, March that cut back on sales. So that's all in line of what we kind of expected after the wet winter that we had. Just check here. Yeah, so that should cover the water sales. Our ready to serve charges are at about 4% over what was projected. And partially part of that, if you remember, we had about a 3.3% increase that went into effect March 1st of this year. However, for the ready to serve charges, it wasn't 3.3% across the board. Some meters went up a little bit more, especially the construction meters. They went up probably 20% in the ready to serve charges because they needed to come in line with the 3-inch meters. And then the 5-inch and the 3/4-inch meters used to be, years ago they were separate, and then we tied those two together. So the ready to serve is a little bit above budget based on those two items. So the pumping charges, this is a little bit surprising to me, only because water sales have been down, and initially I saw we're up 11% in pumping cost recovery. But I just finished the analysis now, and if you remember 2 or 3 years ago, we talked about pumping charges, and at the time I think we were only recovering about 50% of our pumping charges. It was at board's direction that we start recovering up to 95% of our pumping charges. Now these are the pumping charges to reach the elevations that are above level. And so we did a 3-step increment to go from 50% up to 95%. Last year was the fiscal year 1920 was the year that we were supposed to be at about 95%. And so we did see a jump in the pumping recovery costs to get to that 95%. And then some of the other revenues were up about 14%. And a lot of that is some one-time revenue we received. We got a one-time reimbursement from JPIA. We received a little bit of reimbursement for a solar project, and some annexation fees that normally are sporadic came in. So that accounted for the 14% over budget on revenue. Before we go on to the next portion, if there's any questions, I'd be happy to answer them. No? Okay, Wes.
Nope.
Oh, so now, real quick, going back one. Can you go back one, Wes? So we're at about 93%, but if you add in that $3 million or so of accrual that we mentioned, we'll probably be at about 97% of our budgeted revenues. So water purchases. So we budgeted 32.2 million. We came in at 29.2. So partially part of that was about a 4%, as I mentioned, our sales, our volume was about 4% down from budgeted projections. Again, a lot of that was the wet weather. So we didn't sell as much water, so therefore we didn't purchase as much water. Also, we did have the OMWD deliveries. We have a contract with them to buy, I think it's 2,750 acre feet. We did purchase a little bit more from OMWD, which actually results in a bit of savings, about $100,000 in savings there. And also in some of the desal deliveries, we were under on the desal deliveries. I believe in June we didn't receive any desal deliveries, so we saved about $400,000 there. So those are the reconciliations for the water purchases. I will turn it over to Wes for the next portion again, unless there's any questions or comments.
Okay, so yeah, this slide is a summary of our department expenses, and again, it's in the quarterly board packet. So you can see it's summarized, the expenses are summarized by operating and supporting. The operating departments consist of the pumping, water quality, water treatment, tanks and reservoirs, transmission, distribution, services, meters, and backflow. So, and supporting actually consists of customer accounts or customer service, buildings and grounds, equipment and vehicles, engineering, safety and compliance, and information technologies, or IT. So those expenses, and this is where we're really going to see the preliminary numbers and how we can say that, you know, operating is at 88% of budget, but we're still getting a lot of invoices coming in there. So we expect that to be a lot closer to budget once we finish the year and record all the expenses. Really, it's just a matter of timing of getting the invoices for materials and for services performed and getting that more in line with budget. Same thing for supporting, it's at 93%, but hopefully once we get all the invoices recorded and in, we'll have that be closer to budget. And while I go through this, I'll mention that once we get the audited numbers, we will be bringing those forward to the board. So you'll see budget versus actual for the final audit numbers, but that'll be more towards November. We just wanted to bring it forward sooner for timeliness. And then G&A is at 88%. That there are some invoices there, but a lot of that is just because there was actually more labor charged to projects for water. We had budgeted $854,000 for overhead, and it came in at $1.2 million. And as you know, overhead reduces G&A operating expenses and charges it to the project. So that's a little bit lower as a result of more overhead than anticipated. And overall expenses for water operations are at 90% currently. But again, we expect it to be closer as we get towards the audited timeline. So in total, what does this mean? We looked at the water operating revenues. Now we're looking at the water operating expenses. As you know, the excess of revenues over expenses gets transferred to reserves for operations. So looking at the operating transfers, we had budgeted $46.7 million for revenue and $44.4 for expenses. So we had budgeted operating transfers of $2.3 million. The actual came in at $43.2 million in revenue, or came in preliminary numbers, and $40.1 million in expenses for a preliminary operating transfer of $3.1 million. So it's about $800,000 higher than we anticipated currently. And that's for water. So now we're going to move on to sewer unless there are other questions.
Yeah, not a question, but just a comment. Like, I think these numbers that 90% is probably going to close closer to 100 when it's all said and done. But our goal, and I don't know if this is like an official standard that we have voted on or anything, but just because the budget amount dictates what the rates are going to be, I just want to be mindful. I think we're way better about it today than we were when I first got on the board, but I know when I first came on the board, those numbers seemed like they were off significantly. And I just, I remember having to, during our 218 processes and stuff, having to mention that the budget numbers just seemed like they were always way larger than the year-to-date actuals. And so first thing, I think you guys are doing a good job from what I've seen right now. It'd be interesting to see what the end results are after everything comes in. But we should try to be like plus or minus 5% as best we can. I think that gives us a little, that way, I know we're never going to be perfect, but it gives us enough little wiggle room, but doesn't adversely impact the customer's rates either.
Yep.
I have to say, I agree totally with Director Sinella. Back a few years ago, before the current administration's in, that used to be a largely fluctuating number, and I think you brought it down more to reality. So thank you very much.
So moving on to sewer operating revenues, there's some good numbers on the top of this one. We see two 100% right there. That's an A plus. So we got two A pluses at least. No, but so sewer service, because there aren't major changes in the number of sewer customers. We had no rate increases for sewer. It's a lot easier to budget sewer and actually have it be really accurate. So we came in at 100% of the budgeted revenue. It's a little bit over, but it's like a 0.48%, in excess of what was budgeted. Reclaimed revenues came in at 100%, but the reason for that is because we bill reclaimed based on budget. We haven't done the true up yet. The true up happens during the audit process actually, and is finalized in November when we send the true up, whether it be a bill or a credit to Carlsbad and Liebenheim. So that'll happen sometime in November. So for now it's 100%. And then other, that's the same thing as Mike mentioned on water. We just had the Aqua JPIA reimbursement, and then we had the other part was the solar reimbursement that we got for that. So that brought that in at $319,000 versus the $80,000 budgeted. So for sewer, overall, we're at 102% of what was budgeted, which is only 2% above. So that's pretty good, right in line with what we anticipated. Moving on to sewer expenses. We look at this one, we see treatments at 78%. So that's pretty low, but treatment is low because we're estimating Encina's bill for one, and we actually just got the fourth quarter invoice from Encina, and they came in at about 200,000 over on operations. So that number will go up for sure. And then the other part of it is Meadowlark. We're having just delays in materials and services there, as well as I guess there's been delays in contractors getting them to do things. So as a result of COVID, actually. So some of the stuff may not get done this year that they were anticipating having done. So that's the reason for treatment being low. And then looking at operations, it's very similar. So for sewer operations, the departments are collections, lift station, source control. Then you have, and that's it for operations, actually, collections, lift station, and source control. For supporting, those are customer accounts, buildings and grounds, equipment and vehicles, engineering, safety and compliance, and information technology make up the supporting category. So for operations, the same thing. We're at 90% right now, but again, we're expecting a lot of materials and services invoices. We're already getting them in, they're being recorded, but they won't change until we get the audited numbers. And supporting, the same thing, it's at 87%, but it will be much closer when we get to the audit. And G&A for sewer is interesting because it's actually at 109%. And the reason for that is because we've had less labor charged to project for sewer projects than we anticipated. We had budgeted I think it was $488,000 for overhead, and it came in at $375,000. So that actually reduced G&A by less than we thought it would. So that's why that's at 109%. And overall, currently, preliminary numbers for sewer operating expenses are at 85%. So what does that mean for sewer? If we look at the operating transfers again, the excess of revenue over expenses budgeted, we had $20.7 million in revenues budgeted, $14.2 million in expenses, and we had an operating transfer budget of $6.5 million. The actual came in at $21.1 million for revenue, $12.2 million for expenses, and the total operating transfer actual preliminary is $8.9 million currently. So it's $2.4 million higher than what we anticipated. But again, that number will be reduced as we get more expenses recorded.
Yeah, but same comment, Wes. I mean, at $9 million, I mean, I know it's going to come down, but that's a lot of money to go to reserves that ratepayers paid through the course of the year. I know they benefit from the reserves, but we got to keep an eye on that so it doesn't keep creeping up.
Yep. So, and the other thing, so that $9 million, so we had budgeted 6.5, and we budgeted the 6.5 transfer to reserves because we had about $18.8 million in projects for replacement alone that were budgeted to be performed. So the excess isn't just excess, it's actually, it's used for projects.
No,
yeah.
I understand. I understand.
So next thing we're going to talk about are the reserves, unless there are questions on operations. And keep in mind, reserves are actual. So this is what actually happened on a cash basis. And while there may be delays in projects where we had planned projects and they just haven't happened yet due to, some of it's due to COVID and other issues with getting projects completed, these are going to be actual reserve balances. So if we look at the June 30th, 2020 reserve balances, this is a summary of the reserve report, kind of rolls it up. And the first thing to note is the beginning balance for water replacement, which is kind of in the middle, is $37.6 million, or was. And for capacity, there was a shortfall of $7.6 million. During the year, we collected $6.9 million in revenue for water replacement. That was made up of the operating transfers we just discussed, and the property taxes and other, which consists of RDA, investment earnings, and property taxes. And then for water capacity, we had $1.7 million in capacity fees collected for water. The distributions for water replacement were $6.7 million. That was made up of the PERS UAL of 4.1 and capital projects of 2.5. And for capacity, we had distributions of $2.3 million, and that was made up entirely of the debt service. And it's worth noting that the debt service was actually larger than the capacity fees collected for the year, which will increase our shortfall. So the ending balance for water replacement was $37.9 million, and for water capacity is $8.2 million. And you can see the shortfall started at 7.6 and went to $8.2 million. So now looking at wastewater, so sewer replacement started with a beginning balance of $58.7 million, and sewer capacity started with a shortfall of $8 million. During the year, we collected $12.3 million in sewer replacement revenue. The majority of that was the operating transfers of $8.9 million. The remaining balance was $3.4 million. For capacity, we had sewer capacity fees of $5 million. During the year, we had distributions for sewer replacement of $11.2 million. $4 million of that was for the PERS UAL and $7.2 was for capital projects. Sewer capacity had distributions of $4.3 million. Of that, 3.4 was for debt service and $830,000 was for capital projects. And it's worth noting that the capital projects we had budgeted for sewer capacity, we had budgeted $4.9 million and we spent $833,000. So that's a significant variance in the amount of capital projects that we were able to complete during the year. So the ending balance in sewer replacement is $59.8 million. And the sewer capacity shortfall is $7.3 million. So the shortfall actually decreased by about $700,000. And that's basically because we didn't spend the money on the projects that we thought we would. So that's the summary. Now we'll go into the replacement reserves, and then we'll talk about the capacity reserve balances after that. So here are the combined water and sewer replacement reserves from 2015 to 2020. You can see in 2020, the replacement reserve balance is $84.8 million. And that balance is actually below the ceiling of $89.4 million and above the floor of 26.7. So it's within our reserve policy limits. In 2019, you can see that the replacement reserve balance was actually above the ceiling. So we had rate stabilization that year, but I'll discuss that in a minute. And then finally, the 2019 balance for combined was $80 million versus the 84.8 that we have this year. So looking at replacement reserves separately, breaking out water and sewer, here are two charts that you've seen before. And the water replacement reserve balances in 2019 were just about at the ceiling, around $32 million. But in 2020, those numbers have actually come down. And now water replacement is at 32 versus a ceiling of 34.6. We look at sewer replacement. Last year, as I mentioned, we had rate stabilization funds of about $4.8 million. We were above the ceiling. But now, because of the amount of sewer projects, and you can see it's starting to the balance is starting to come back down and is below the ceiling now. It's at 52.8 million, and the ceiling is 54.8. And we expect, as you've seen in the budget presentations, as we complete more sewer projects, especially, we had some this year that weren't completed that we planned on completing, these balances will come down and be more in line in the middle of the floor and the ceiling, and not as close to the ceiling as they are now. That was just more planning for future projects that will be happening. So that's water and wastewater replacement. Now looking at the capacity reserve balances from 2015 to 2020. And these are all shortfalls, as you can see. If we look at the 2019 shortfall, you can see that the water shortfall was $7.6 million and the sewer was $8 million. In 2020, those numbers have come up for sewer. It's come up to 7.3, and water actually increased the shortfall down to 8.2, up to increase. It sounds kind of funny, but the shortfall increased from 7.6 to 8.2. And if you look at the table below, this shows the combined capacity fees and distributions for water and sewer, but I wanted to compare this year to last year. So if you look at capacity fees, from in 2020 for water and sewer, we collected $6.7 million or $6.8 million in capacity fees versus $8.8 million last year. So we've collected $2.1 million less in capacity fees this year than we did last year. And the distributions have only gone down by about $900,000, which should result in sort of an increase in the shortfall. However, because of the change in sewer and water, sewer actually, as we mentioned, the sewer shortfall increased or reduced by $700,000, whereas water went down. The water shortfall increased by $600,000. The overall shortfall change, here are the distributions, I didn't highlight this one. The overall shortfall change is a reduction in the shortfall of $200,000 in this fiscal year. So that's the capacity reserves. Next, we'll take a look at how the reserve balances did to what we budgeted. So looking at this, it's not necessarily a pretty picture, but hopefully we can explain why what's happening. So if we look at the water replacement, we had budgeted for a balance of $29 million, and the actual came in at 37.9. So for water replacement, we have $8.9 million more in reserves than we thought we'd have. That's mainly because of projects. So we had, not only is it projects, but we also have to remember that, well, it's cash balance, so it's basically projects. We didn't spend about $3 million in project costs that we thought we'd get completed, and we weren't able to finish. Hopefully at the board presentation, James can shed more light on this and give you more information about what projects we weren't able to complete. But this is really just a timing issue, and what I mean by that is it's self-correcting. So if we budgeted for $5.5 million in projects and we weren't able to get to them this year, we will get to the next year, and that balance will come down accordingly. And we also have the projects we budgeted for in the future, and when we get those done, reserve balances will level out. So looking at capacity reserves, though, we're actually right in line with the budgeted amount. It's only $65,000 difference between what we budgeted versus the actual. Then sewer replacement, everyone's supposed to disappear. Sewer replacement, the budgeted balance was 47.2 million. Actual came in at 59.8. And so that's a $12.7 million variance. And again, that's because sewer projects, we had budgeted $15.6 million in projects, and we were only able to complete 7.2. A lot of that is actually, Encina was delayed in completing a lot of their projects, and we just got the bill, but because this is a cash basis, it's not in the reserves because we're paying it now versus June 30th. And that was over $3 million. That, and we had several other, I think it was, well, the outfall would be capacity, but there were $8.4 million in our own projects that were budgeted that we weren't able to complete.
Yeah, like the San Marcos Interceptor.
Yeah, I was going to mention that one, but that one's capacity. It does have a portion that's the replacement though. So yes, it's a good point. I think isn't it 60% capacity? I forgot the allocation.
In that range, I don't remember the exact number, but it's about that 60-70% capacity.
Yeah, so the Interceptor is a big portion of that too. So we have, I mean, not completing those projects and the timing issues with that. And some of it's actually due to COVID. I think I mentioned that already, but again, James can shed further light on that at the board meeting on the 19th. And then looking at sewer capacity. Sewer capacity, actually, I think I talked about this before. We just didn't get the projects done that we thought. We had $830,000 versus the $4.9 million. So the change was $1.1 million actual versus budget for sewer capacity. So those are the reserve balances and how they compare to what we had budgeted. Now I'll be talking about the next steps unless there are questions on that. So moving on to next steps. On August 19th, we will be bringing this presentation to the board just to give more information. And we plan on doing this on an annual basis. So going forward, the plan is the first meeting of every fiscal year. So this year, it would have been July 15th. When this quarterly report is in your board packet, we plan to give this presentation to give you an update on how we did during the year. Even if it's preliminary, at least it can be useful information on how we've done and what we're reporting on. Then for this year, and this is pretty typical, our audit fieldwork usually takes place the third week in September. So they'll be here from September 21st through the 25th, unless we can get them out of here sooner. But we like them to be detailed, so we'll keep them around for at least 4 days. So we'll be prepping for that during that time, recording all of our accruals and putting all the invoices into the appropriate year. And then in November, we'll come forward with the comprehensive annual financial report, which we'll present, or CAFR, which we will present to the board, and that'll be either at the November 4th or the November 18th board meeting. So that's all I have for my presentation. Until next month.
Thank you, Wes.
Thank you, Wes. Good presentation.
I don't see a raised hand from, oh, I just saw Mr. Hunsaker's hand go up.
Okay, Mr. Hunsaker?
Would you like me to allow him to speak now?
Yes, please.
Okay. Go ahead, Mr. Hunsaker.
Okay. I had two quick questions. Are you still factoring in about a 3% construction fee inflation rate? And what about increases in water costs? And there was a quick mention about some reductions in desal water purchases that was made. Can you give me a little more information on that? Thank you.
Would you like us to provide an answer to that?
Yes, please do, General Manager.
So every year we do include an inflator for construction costs. Mr. Hunsaker mentioned 3%. It's not always 3%. It depends on how we see the construction market going, but we always do anticipate the cost of construction will increase over time. We do that for the budget that's adopted for the 1 year and for the forecasting looking forward. Similarly with the County Water Authority, the water costs, the amount of money that we spend to acquire the water that we sell to our customers. We always look to the Water Authority to see what they've done in their rate setting process. And oftentimes the timing's a little off, meaning Vallecitos may be adopting its budget before the Water Authority has taken their final action. But we're in contact with the Water Authority staff all the time, so we have a pretty good idea of what they're going to be doing for the upcoming year. And they do theirs on a calendar year basis. So we have a fiscal year, July 1 to June 30th budgeting process. The Water Authority sets their rates on a calendar year basis. So there's always 6 months that we know and 6 months that we're kind of guessing, and we're not guessing, but educated guesses on where the Water Authority rates will go. And I think the last item that Mr. Hunsaker brought up was reduction in desal water. So there was a red tide event out in the ocean, which caused the desal plant to be shut down for a period of time. And for that period of time, that's an excused shortfall. So we don't have to pay for the desal water at that point in time. But similar to what we do with our recycled water contracts with Carlsbad and Olivenhain, there's a true up at the end. So what we find out is we're contractually obligated to purchase 3,500 acre feet per year of desal water. That works out to be about 293 acre feet per month if they were to deliver us equal quantities every month. Oftentimes, when a plant is up and running, they'll deliver far more than the 293 acre feet. So in a sense, the Water Authority gets a bit of a credit every month. So if there's a bad month, like June was a bad month, they don't excuse the entire 293 acre feet. So we wait till the end of the year, and then there's an accounting to determine, did they deliver the entire 3,500 acre feet, regardless of whether they met monthly minimums or not. So there was a shortfall. We did recognize that in the water purchase costs, but as the true up comes, and I'm not sure exactly when the Water Authority does their true up, it'll be later in this year, there may be an adjustment at that point in time. We just don't know what that amount is. So that's my response to the three issues that Mr. Hunsaker raised.
Thank you, General Manager Pruitt. Excellent answers. Thank you. Going on to item number 2, PERS earnings down date.
Wes, can you stop sharing your screen? All right, so I'm going to share my screen here, hopefully. Can you all see this?
Yes.
Okay, so as you know, our employees' retirement costs are covered by PERS. We pay into PERS, and the employees pay, the employer pays, but the vast majority of the money that PERS makes is through investment earnings. So I joined a webinar that PERS had. I think it was beginning of last week, and they gave an update on how fiscal year 2020 ended. So I just wanted to briefly share with the Finance Committee what I found from that seminar that I was on. So their targeted return rate, with all the monies they get from the employer and employee and the reserves they have on hand, they assume that they're going to make a 7% return. The year was going pretty well until March hit, and then with COVID and the impact it had on the stock market, the year-to-date returns in March were actually negative 4.5%. So they're targeting 7% increase, and at the time it was a 4.5% loss. So in that February to March timeframe, the PERS investment pool actually lost $70 billion in equity. So that was a pretty big loss. Obviously, you all know the stock market rallied pretty well from March until the end of June. And the fiscal year 2020 return over the whole period was 4.7% up. So it wasn't as good as the targeted rate of 7%, but it was almost a 10% increase over where we stood in March. So it rallied pretty well. At the end of 2020, fiscal year 2020, June 30th, the asset valuation for PERS was about $390 billion. I checked on their website today and the valuation was about $403 billion. Some of that's because the market's up, there has been up, and some of it's because agencies have been contributing more funds. But it's going in the right direction, and that's good. And overall, the PERS funded status is a little under 71%. We're well over that. Last I recall, we were at 75, 76%, but that's a constantly changing number. We've been making accelerated payments, so we'll see when PERS releases their latest actuarial report, which should be in August. We'll provide an update to the Finance Committee and then to the board. One thing I took away from the webinar that I was on with CalPERS, these changes in return rates aren't instantaneous. So it actually takes PERS a little over 2 years to work these numbers into the contribution levels that they will be charging its members and its member agencies. So we'll start to see the impacts of this in the 22-23 fiscal year. So I don't see, in the upcoming fiscal year, there won't be a lot of changes related to COVID, but in years following that, there may be. Particularly if the market experiences an extended downturn, if PERS isn't making its 7% estimated return rates, then it may reflect in the contribution levels.
I have a quick question.
Sure.
PERS is quick to show Debbie Downer numbers, but it didn't show the last 2 years worth of numbers when the stock market was doing great. How well did they perform at that point in time is the question.
Yeah, so they did pretty well. The next slide touches on that. It doesn't get quite as granular as the last 2 years, but these are the PERS historical annualized returns. So over the last 5 years, they've hit a 6.3%. And that includes the fiscal year 2020. A 10-year period, 8.5. They beat that 7, and it was a little over 7% expected return rate, but they beat it. 20-year period was only 5.5, but that included the economic downturn in the 2008, 2009. But if you go over a 30-year period, their returns are about 8%. So I think an estimate of 7% based on these historic returns is a pretty good estimate. But in any shorter period of time, you're bound to be above or below. PERS is the first agency to say, they are always saying, we are long-term investors. They don't overreact to short-term returns. So they're more likely to look at the 30-year return number than they are a 5-year or a 2-year. That doesn't mean that they don't make changes in their investment portfolio any given year based on what the market's seeing, but they're a long-term investor. So having said that, PERS doesn't invest in just one fund. So as you can see on the screen, they actually have 5 different broad categories. The top one is just their total fund, and we talked about that before. It returned 4.7%, but that's made up of 5 different funds. And in 2020, their public equity funds was pretty flat at 0.6% return. Their private equity was down 5% over the period of the year. But if you look at the asterisk, that's been one of their best performers over the 10 and 20-year periods. So a 10-year rate of return in their private equity has been up over 10%. And over 20 years, it's been 7.5%. In both cases, easily beating the targeted rate of return. It's just been a tough market for private equities, or at least it was this past year. Their fixed income did really well, surprisingly well. It was up 12.5%. That's rare, though. Usually, that's a relatively small portion of their income revenue investment pool, but it did very well this year. In their real assets, up about 4.6%, and their liquidity assets up about 1.6%. Combined, it was that 4.7%. So PERS is pretty diversified. You can see that this year, fixed income did well, private equity did bad. In different markets, you'll see the private equity soaring and the fixed income will be down. Those two are almost always counter to each other. but PERS sees that as a way to hedge their bet for whatever market changes there may be. So I just wanted to highlight to the board or to the finance committee that PERS does diversify, and overall they did pretty well given what happened to the market in 2020 to have just barely missed by 2.3% their investment returns. I think that's pretty good, and hopefully things will be better going forward. So that's all I had. Does the board have any questions, or the committee have any questions?
No questions for me.
A great presentation. You're going to be making this to the board as well, I assume.
Yeah, at some point in time, we'll share that with the board as well. It looks like Mr. Hunsaker has his hand up again. If you'd like me to call on him, Director.
Sure,
Martin.
please do.
Okay. I can't get him to unmute. Mr. Hunsaker, you can go
I
ahead
forgot to lower my hand. Usually the commentator lowers it after each subject.
now. Okay.
Apologize for that.
Did you have something on this item, or was that just a holdover then?
That's a holdover.
Okay. Well, thank you. I apologize. So that's all we have then. That's those are the two items that we had.
Okay, any other business? Mr. Sanella?
Nope.
Thank you very much, and we will now close the meeting. Thank you very
All right.
much. Thank you all.
Thank you.
Have a good night, everybody.
Good
Great
night.
information. Thank you, Wes and Mike. Excellent, as
All right.
always.